Hey there, and welcome to the channel. Thank you for hopping on. I have been wanting to do this video for over a week now. I think it's long overdue. Thank you for your grace. I think I've told a couple people about it. One of the biggest things is it's deadline season, and so we have all these extensions overdue, and yeah, it's just time. So let me go ahead and get started. But before I do, please don't forget to like, share, and subscribe. The point of this whole effort is to make sure people are informed about what I'm about to discuss, which is taxes, and they can kind of put themselves in a position of knowledge. So again, like, share, and subscribe. And without further ado, let me introduce myself. My name is Adrienne Trice. I'm a business tax strategist. I love being able to save people in my network, people who I have worked with, my clients, money so they can expand and invest in their personal lives. So I wanted to do a video on the tax plan that Harris has been discussing. We already saw that debate on Monday. She had her first interview with Waltz last week, and we have tidbits. This video is going to undo what hasn't been undone. A little joke, but let me be serious. This is going to clarify what the tax plan is really about. So if you hear sound bites from Harris, and I will do one on Trump as well, you'll be able to interpret it and have a little bit more knowledge instead of being like, yes. No, like this will be like, yes, you actually understand what her wish list is about, because I honestly think the American people should understand these are not plans that are they're going to go through without the passing of it through Congress, but they make for good social media banter. So let's get started. I want to make sure I don't keep you too long because taxes is not the most interesting thing. One of the things that she is going to do first off is increase tax brackets. Currently, the tax bracket is, let's see, ranges from 10 to 37%. She definitely wants to increase tax brackets anywhere between 20 to 22% per bracket. The theory behind this is if she can increase it for the upper percentage of those who make higher amounts, that could contribute to, I suppose, the deficit. So again, she wants to increase the tax brackets. Another thing that she did mention, I did catch on the debate on Monday. I do not know if the amounts that she's talking about on Monday are the same as what I researched. I'm just going to talk to you about what I researched. Again, this stuff is influxing and ever changing, but currently we are getting paid for children under the age of 17, $2,000. If her proposal gets approved, she wants to have each child be $3,000, and then $600 is the additional amount for children under 6. Example, if you have 2 kids under 6, $7,200. So this one would be giving more money in their pockets. I think it felt a little like people need to get clarified that this is a credit that you would get once you file your taxes. She also wanted to increase the standard deduction. Right now for singles, it's $13,850. Married folks, $27,700. The proposal states that she would like to see it be anywhere between $1,000 and $2,000 more. I know it goes up more every single year. The Tax Cut and Job Act of 2017 is going to expire next year. So we were expecting some of these changes anyway. So we would just have to see how this plays out. The next thing would be she wants to increase capital gains on the most wealthiest. And so just to let you know, that is when people sell something, an asset, if you will, and then they acquire some sort of gain, in that amount they would be taxed on it. The current rate is 15% to 20%. That could increase to 25% for those earning over $1 million. Slippery slope here, because a lot of business owners, once they enter into maybe the 5th, 6th, or 7th business, and they've been quite deliberate about increasing their margins, they could easily fall into this depending on how this is written into the tax code. The next one is the one that I think is more controversial. I do not think this is going to pass, but I do think that people should understand what an unrealized capital gain is. It is when you have an asset that has not been sold and you are taxed based on the value that is assessed by market value or assessed by what it would be at the end of the year if it was on the market, like the stock market. So if you had stocks that you held, they did not get sold, whatever it was increased by, that asset increased its value by, you'd be taxed on it even though it wasn't sold. If you sold a house, you'd normally get that tax when you sell the house. In this world, you would have a tax based on the end of year house value. Now, there are thresholds for this to happen in, but it's a slippery slope, because once it enters into the tax code, I don't believe there would ever be anything turning back. So we would have to really watch that. And it's very interesting. It gives you an idea of the culture. The next thing is corporate tax rates for those who have corporations, and there are people who are small businesses that do. It goes from 21 to 28%. What's the next thing? Incentives for small businesses. So she did mention this in, I believe, Monday, how she wants to have credits for business owners, and that's going to help small businesses. Listen, there are already credits for business owners. We just need to be aware of them. So if you hire a certain type of employee, for example, if they have TANF benefits, if they live in certain zip codes, there are incentives for employers to get these type of employees, bring them on board, and then they can file forms with the IRS and get these credits. Now, whether or not she's going to increase them, that has yet to be seen, and will probably be seen a little bit more in the event she becomes president. The next one is, let me see, QBI. The current deduction is up to 20%. So QBI is qualified business income. So for example, she could possibly cap this for incomes over 400K. QBI is an excellent benefit for those businesses who can qualify for this. If they have a tax liability, their businesses qualify for it. It eases that tax liability based on the income formula. This would impact a business owner making 500K or more. Doesn't really formulate, let me give you a credit and then let me take away QBI. So I say this to say these are some of the bullet points that I've noticed in this tax plan. Take a look at it. Figure it out for yourself. But now if you look at any of the rallies, if there's another debate, it would be nice to see if there could be another debate. She did perform better. In my opinion, she did have some talking points. But we need to go ahead and let this play out and see what unfolds. In addition, thank you for coming and listening to that. I have a wonderful master called crackthetaxcode.com. It is now only $27. It may go up, but if you go ahead and join it, it is phenomenal. I will be rolling out a booklet. There's a VIP upgrade. And within this, instead of waiting for 2025, stressing your accountant, tax advisor, CPA, business tax driver, whatever you call them out, you'll have the things that you need in order to get better aligned and more focused. You can avoid penalties in this class. I'm going to show you that, how to possibly abate them. but some of the most overlooked tax expenses. So that's all I have for you today. Thank you again for hopping on. Take a look. Tomorrow I'll do Trump. But yeah, just enjoy yourself. And again, so grateful for you. Have a wonderful day, evening, wherever you are.